Hey everybody, welcome to the Jay Young Show, sponsored by King Operating. Hey everybody, Jay Young here with the Jay Young Show. I tell you what, it's good to be here today. You know, after Easter holiday, we're buckling down, getting ready for the summer, getting everything going. So we're excited about it. And Jordan, are you in here somewhere? There you are. Hey Jordan.
Oh,
Oh, my beautiful co-host and the people that
hello.
brightens up the day for sure. So hey Jordan, how are you?
Well, doing fantastic, Jay. I think I alluded to this last podcast, but I actually got my first buyout for the property management with the Airbnb. So I've successfully sold my first little business endeavor,
There you
and
go.
I
Where's the
credit
party?
you
Where's the party?
to to getting that up and running. So thank you.
Oh man, I'm glad to hear it. Glad that you had some success. I mean, you know, it all starts with a little bit of success and then just growing that exponentially. So we're gonna hear a lot more from Jordan in the past. And I'll tell you what, we're gonna bring on Tom Prevost. Tom, come on in to the. There you go. Hey Tom, how are you doing today?
Good. How are you guys?
I'm doing great. Glad
Great.
you're here. Tom is a partner of ours, which we're very thrilled to have him on. And Tom is a engineering background, and then came into real estate. And he lives a little bit south of us here, down I-35, in between where Jordan and I live, a little bit of sideways. But anyway, he's in Austin. And Tom, tell us a little bit about your background and where you got started before we start.
Sure.
Yeah,
Sure. Yeah. Thanks for having me. I really appreciate it.
absolutely.
Kind of unique being on here just as an investor of yours and a partner at King Operating. It's been awesome. And the journey kind of started as engineering, as you said, graduated an engineering degree, did engineering consulting for 20 years. And then about 14 years ago, slowly transitioned into the alternative investment space, started in commercial real estate, and specifically into multifamily at that point, and then kind of continued from there. So,
Right. Well, that's great. Did you see more opportunity in it? What attracted you to real estate? I guess.
I think initially it was, you know, passive income on the side,
Hmm.
ownership in something,
Yeah. Yeah.
um, deductions, all the stuff that go along with having real estate in your portfolio. So,
Yeah. That's good. I mean, when you're growing up, when if you're old as I am, you know, I'm 62, but when we were growing up, it was the no money down commercials late at night. You know, you'd watch those
Mm.
late night,
right.
no money down, and you'd put in money with these guys, and all of a sudden you're buying books and tapes, and I've got stacks and stacks home, and man, my mom, 8 tracks, cassettes, I mean everything in the world, and never did really become successful in real estate. But hey, it was all a no money down gimmick that people had, and I did buy a property. I did buy a property with no money down. I did do that one time.
Really?
Matter of fact, I borrowed more money than I got from the bank, or that I paid for it. The bank gave me like 20,000. This is a small house in
Hmm.
Sulphur Spring. Give me like 20,000, and I owed 16,000. So I put money in my pocket. I actually put money in my pocket. That's back a long time ago. You can't do that these days. Too much transparency and everything else. But this was back in the 80s. So things have changed a lot since then. But anyway, we're not talking about me in real estate. It'd be a short. It'd
Interesting
be
deal, though.
it'd be a short story, and it wouldn't be a good one. And Jordan's had more success. Jordan's had more success than I have, but I do love real estate, and I love the model of real estate, and that's how we have kind of transformed our business and what we do in oil and gas, thinking
Yes.
about how they do it in real estate. So, but Tom, you're an engineer first. You got your engineering
Mhm.
degree, and you had a
Mhm.
career. Did you have a career in engineering?
I did. It was about 20 years in consulting.
Okay.
Um, Specifically design of remedial systems in the hazardous waste space under subsurface groundwater cleanup, soil cleanup kind of activities, and then ended the career into environmental management for livestock and agriculture up and down the West Coast, from Washington down to Arizona. So feedlots, swine, poultry, dairy, name it. So
Wow.
We were on the back end of the animals, which is where all the money's at, so they say. So that's where we were.
What made you
So,
want to go from engineering to real estate? What kind of inspired that transition?
um, I think the impetus of that was kind of a family dynamic. So my wife's in tech sales. She still is as a director. I was in engineering. We were both flying across the country, driving across the states, and we had three kids in the middle. And you can imagine kind of that logistics and what that looks like and the stress levels being a little high. We said something's got to change. So we had an opportunity to present itself, and I took an out of engineering and went into something that was a little more flexible. That was the plan to allow my wife to continue her career and kind of bring the family dynamics back to a peaceful place. Not that it was unpeaceful, but we saw where that was headed. So that started it. And then we'd always had our eye on real estate for our entire marriage. And now this looked like the opportunity to kind of dig in. So,
Yeah. So tell me about your first deal. What was your first deal?
the first real estate deal was so after I got out of the engineering career, I went and educated myself into multifamily investing. So that was kind of the first into commercial real estate. And so I spent a lot of time educating myself on all facets of that. And that was really the first deal. It was into getting into a syndicated group with, slowly building my network of people, got into a group and we syndicated a deal. And from there, got into several more throughout the Midwest, same group of people.
Is multifamily or is it
Yeah, all multifamily at that
all
time.
multifamily
Yep.
syndication? So you went in with a group of people that wanted to
Yep.
invest in a multifamily deal,
Right.
put a few bucks in along with other people.
Mhm.
That's good.
Yep.
That's good.
Yep. And anywhere from
That's what
10
Jay
to,
keeps telling
oh,
me. He's like, you need to talk with other people and you need to ask for money.
yeah.
And I'm like, it's so scary to get started and do that.
I
Like,
know.
Yeah, you
I
find the
know.
right people, asking for the money is really not really that tough. It's
Yeah.
finding the right people who are aligned with your
mm,
interests. So,
Right. Well, hey, that's good. Let's talk about that for a second. I mean, we can come back to some of
sure.
these questions, but what would you what would you suggest to Jordan? And I can only tell her so much, but what would you like right now? She's got a little money. She's got a good job. She's getting ahead, and she's a mover and a shaker. Man, she really wants to do it. What should yeah? What should she do right now? What do you think is a good idea, or what do you think is a good thought? What would you do if you were her?
Did I already see my disclaimer that I'm not an investment advisor? Do I need to say that to make sure?
No, you
So
didn't.
this is just
But
person to person.
it's all written down. We've got it recorded, so
Okay,
you're not.
perfect.
Yeah, but
I
I
don't
mean,
know,
man, we want successful people like you to give us some advice, man. That's what this is all
Yeah,
about. You know.
perfect. I don't, I think going along the strategy we had and where, where we really started to accelerate was finding that right group of people. Was constantly surrounding myself with obviously people that were smarter than me and
Hmm.
knew more what they were doing. And
Right.
I was, at the time getting scraps from the table and I'm a learner guy. So engineering, I was always digging in and researching myself, but you needed that guidance. And I think having a trusted environment and a trusted group of people is key.
Yeah.
And I
Yeah.
think how you do that is up to you. And I know there's a million ways to do it, but that to me was one thing, having a trusted group of people around you, aligned with your interests that really can accelerate and bring deals to the table.
Yeah. I mean, able to read about deals and read about success and
Mhm.
what people are doing.
Yep.
That's key because you want to be around successful people. I mean, what I heard the
Yep.
other day, somebody said if you're around five people that are millionaires, you're going to become a millionaire. If you're around five people that are successful, or you're going to be successful. But if you're around five idiots or drug users or something, hey, guess what? I mean, you're going to be if you're around five of them, you're going to be the sixth. So it's the
Yep.
same
Yeah.
thing about what you put in your mind. It's like whatever you put in your mind is what you're going to get out. I mean, it's like you're only as good as what you think, and how you think is very important. And obviously, when you think, that comes into actions, and actions become into tangible. How much money do you have, and what actions are you doing, and what money and deals are you doing? So that's good. I mean, is there anything in particular that you watched? Was there any one book that you read that you liked more than others? Any author?
Funny. The first book I read that got me into this space back in the early '90s was Rich Dad Poor Dad.
Oh, there you
Robert
go.
Kiyosaki.
I was thinking
And
about him. I was thinking about
yeah,
Kiyosaki. Yeah.
yeah.
So, Jordan, have
And
you read that book?
that's
Oh, you're muted. You're muted.
It's like one of people's first books that
Yeah.
they like. I follow a lot of investors off of Instagram and stuff, and they all
hmm
kind of talk about that. They're like, you
hmm
need to read Rich Dad Poor Dad, and you know
hmm
it's interesting because everybody has like a different investment approach. You know, if you look at Dave Ramsey versus if you look at someone else who's like, yeah, take on a lot of debt. You know, there is good debt types. You
hmm
know, and so, so it's really intriguing to see all of those different types. And it seems like people are kind of like not really following the Dave Ramsey way anymore, but more of like those mindset shifts of Rich Dad Poor Dad and taking in those more ideas into their investment style. It's
What's the
it's very
biggest difference?
interesting. Like,
Yeah. What's the big? Is it Rich Dad Poor Dad? I know he brought on some debt. He still talks about all the debt he has or whatever. But is that what the difference is between him and Dave Ramsey? Is the
I
not
think
a
Dave Ramsey just has a really safe approach. He's
yeah
like save, 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 pay off all your debt. You don't want any debt at all. Like, if you have a house, that's debt. You need to pay that off. Like, just everything is about paying off and then saving as much as you can versus like in how to invest and different ways to invest and how to grow. And I mean, maybe he has new books, but
yeah
Total Money Makeover, I think, is the one that I was reading,
hmm,
and it just talked a lot about like basically the snowball effect of like
yeah
save as much as you can, which is what I was brought up on was save, 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 cut cost, cut as much cost as you can, save as much as you can, and yeah, they didn't really talk to me about like investing or um, buying multifamily homes was definitely never a part of the conversation. But yeah, no, what you're talking about with the multifamily home and it is on my list to read, but from what I've heard just from the grapevine of the influencers on the social media, which is just a smidge, you know, of it, but it's definitely on the list of books to read.
he's awesome. I mean, he's really good, and he's still out there. Matter of fact, he has a copy of my book. I've got a
What?
picture with him with a copy of my book. He does. He does. I don't know if
Well,
he
we
read
need to
it.
have him on the
Interesting.
show,
I don't
Jay.
know if he
What
read
the
it.
heck?
I know. I haven't followed up. I look up Kiyosaki.com and I don't get him, but I need to. If anybody knows how to get a hold of him, I can show you. I can definitely
Send
show
him the
you.
updated version of your book with like a note in it. Call
Yeah,
me.
but he does have a copy. And
No,
I've got the picture somewhere. But matter of fact, Laura can find it on my phone. And
Yeah, marketing director guru
there you
Laura.
go.
She's
She
the
can find it
best.
and put it on this podcast. That'd be great. It's good.
But
What?
Tom, when you're, oh, go ahead, Jay.
No, I was going to say
Sorry.
what. Tom, when you look at different investments like multifamily, agricultural, vacation rentals, oil and gas, with King operating, what do you look for? What's the most important thing for you in looking at diversification or looking at different types of investments?
Good question.
Yeah, that's a good question. It's kind of a lot, kind of cliche, but looking for like quote uncorrelated assets, right? As much as we can to still getting your returns. I think Ray Dalio at the top of mind, he had a quote about saying something like get 15 or 20 good returns that are uncorrelated. You can
Hmm.
dramatically reduce the risk while not reducing your returns. And there's a lot of calculation stuff that goes into that.
Yeah,
But I always have that at top of mind. I'm not as sophisticated, obviously, as Ray Dalio, but it's one of those, it's kind of a governing principle. Like as we continue to diversify and take on risk-adjusted returns and or risk, we're fairly risk tolerant. I'm always looking at how our personal portfolio, because that's all we manage is our money, is how does that look and how does it shift as we get older and how do I want to change that portfolio from maybe wealth building to cash flow levers and
Hmm.
some combination thereof. So that's
right.
what I do personally for us.
That is
And
a really
Ray
interesting
and Ray
conversation.
Dalio's mind is all that quote is always in the back of my mind, and I still need to dig in and understand all the calculations behind it. But I'm getting a little late in the game here, so I can keep going with our strategy. It's working.
But
Yeah,
I think that that's something that's really interesting, Tom, because Jay, I don't know that we've really talked about that before, is like the different approaches with the investment styles. We've talked a lot about diversification and the ways that you
hmm,
can diversify your portfolio, but not so much, I don't believe, with the goal and the intent of the diversification with the portfolio. And I think that's a really, I want to double click on that because that's really intriguing to me to like when you're looking at the diversification types that you do. So the goal behind that is really intriguing to me.
Yeah. Well, Tom's hit it out of the park.
I think,
He's hit it out of the park. He knows, he's done it. He's living proof. I mean, you don't have a job, a real job anymore, right?
I don't have a W-2, no.
Yeah.
No.
So therefore, I mean, you. I mean, that's what Justin Donald, a good friend of mine that lives in Austin there. I mean, and I hope you meet him. You will, Tom. You'll have a great time. You'll have a great time with him. He's an incredible guy.
Yeah.
And he's been on Lifestyles or something. But anyway, I can't remember. I've got his book. Anyway, he's been on the show, and I see him all the time. He's in my Tiger 21 group. He's in Tiger 21, not in my group. He's in the Austin Tiger 21, which I need to get down there.
Okay.
Sometime.
I think, Jordan, I think part of that is a lot of people will say, you diversify, you can over diversify. And, you have to expect to reduce your returns. And that was kind of the mindset of you're going to diversify, but you're going to play in a safe lane. You're going to offset the losses and wins and just kind of stay in the middle. And I like his approach. You don't necessarily have to do that, but you got to be, you got to do your due diligence and do some research on it.
Right.
When you first started to diversify your portfolio, what was like the first 3 investments that you diversified with?
First 3. So the first investment, which we haven't really talked about yet, is property we own down in Belize. That was done in the early 2000s. So we've held land down there for a while. So we'll put that aside. Number 2 was getting into the commercial real estate, which was in the, as I said, multifamily sector.
Okay.
And then through family dynamics, through my in-laws, we have it's a tire store up in Weatherford. So we own a property and building, and a tire four-wheel drive is our tenant. So we don't own the business, but we own the property and the building that the business is renting us from.
Okay.
So those are really, I guess, the first 3, if you will.
When you were looking at investing in those, it sounds like it was a lot of like land and property. So because you said Belize was land, then you went to multifamily home, which is like property, right?
Yep.
But and then the tire store, but the tire store was really like the property that the business was on.
That's right. Already there, established. So
right. They pay rent. Yeah.
A lot of people, when they're getting into investing, I feel like the first thing that they do is real estate. And I mean, even Jay, when he first got started, right? You went into real estate with your mom. But so why, like, did you find that set you up for success, or that was like the learning opportunity for you then to go to different projects with investment?
I think the latter. I think once I got comfortable in the multifamily space and educated myself, and there's still a lot to learn, right? Like any subject, but I felt comfortable enough and had enough good people around me that we took that jump. And then from there, the confidence grew to say, let's try this, because we're not so naive to that investing, the commercial space in general. Different asset class, got some different unique, criteria around it, of course. Belize was a whole different ballgame. That's a wild one. But these two were in a similar space and very, I think, you're looking at a lot of the same fundamental dynamics and finance around a lot of that, different tenants, of course, but so.
Well, I want to hear about Belize. I don't know about you, Jay. What do you think?
Well, I do, and I mean, I'm surprised at Belize, because normally if you get into real estate, you want to be able to generate some income quick, and it's like, okay, hey, but land.
Yeah, right.
I mean, I've owned land before, and man, there's no money in land. Well, I mean, the biggest land deal that I did was a big ranch, but it wasn't paid for, and I had to generate like $20,000 a year in grazing fees, and I paid $2,000-3,000 in taxes, but I also had a big mortgage on it. So I was like, man, this thing's weighing me down, and so I sold it, made good money, but there's no income. So how do you become retired, or I don't say retired, but you don't have a job with a piece of land in Belize, of all places? I mean, that place is way down there. It's a beautiful
You don't.
place.
You don't.
Make it
You
make
don't.
sense, Tom. Make it make
Yeah,
sense.
yeah,
I
right.
know.
Everybody's going, what is this guy doing?
Yeah.
Fire him, get him off stage. No, Belize was we were down there first in early 2000, 2004. We scuba dived. So we had a chance to travel with people. We scuba dived around the world. And everywhere we
Oh,
went, we
cool.
said, can we get a place to keep for ourselves? And we didn't have Airbnb at the time, but could you rent it out? Could we rent this out and use it on our personal time? Well, for a variety of reasons, all those places were too far away, government, contracts, language, all this stuff. And Belize landed in a real sweet spot. So we said, well, let's just buy the land. It's on the main tourist island off the coast.
Hmm.
We said, let's just buy the land. It wasn't super expensive, and let's sit on it and let's build out this project. Well, that was 20 years ago. So here we are now, finally under construction. So it's been a long
Oh
journey,
my goodness!
but
Wow.
if you look at a return on a compound annual growth rate, people would look at us and go, "What are you guys doing?" Right? It's like it's nothing. But the return on the business we project will be very good. But that's Belize was a very personal something we really wanted to do, and that's the next part of our journey that we're going to be going to is our Belize project.
Is it a big? Is it
You
a
think you're
really
gonna?
big piece of land, or is it?
It was an acre, and then right on the Caribbean side, and then we subdivided, sold half. That's kind of funding the construction. We still need to come up with additional capital, of course, and that'll be a 5 bedroom master suite home with caretakers, chefs, and kind of that model for people to
Oh,
rent out the house
cool.
and do the
That
whole
place is
thing.
unbelievable.
So like a luxury
If you,
stay. Are you gonna do
it'll be a
Airbnb
luxury
with that?
vacation. I Yes, we have to, but we're developing our own SEO so we can rely less on Airbnb because they control a lot. So we're trying to not necessarily be in that position, but you really have to. I mean, I don't know if there's really getting around not being
Right.
Airbnb or
To be
Verbo.
fair, I find that their platform is very like,
Yes, you sold a product. That's right. Okay,
yeah.
so
So
you lived and breathed it. Okay.
when I started with Airbnb, I had no idea what I was doing. I was like, let's just figure
Okay.
it out,
Hmm.
and started it from scratch. And the moment it went live, it's been booked at, I would say, 95 to 100% capacity every single month since
Wow.
I first started it.
Wow.
Wow. That's
Now,
a
Man.
big
part of
number.
that's location, obviously,
Hmm.
and price, but I mean, it was bringing in $5,000, a little over that a month.
Okay.
How do you?
So,
How much do
Awesome.
they charge
But
you? Do they charge you money for that, or do they get a piece of the top?
so the platform the people who are staying at the property, they pay the fee. So they pay the occupancy taxes if you're stateside. I don't know about overseas, but the guests are paying the occupancy taxes and the fees. There's a slight little host fee, but overall, I mean, the majority of the money like does go to you. Um, One
Is
of
it
the
like
biggest costs
10%
and
or twenty
expenses
percent?
was the cleaning fee was really like the main
Yeah,
thing.
but they have to pay it. I mean, so
But
somebody's got to pay
they
it.
pay the cleaning fee. So,
Yeah.
it's like, okay,
right.
well,
It's just
you
passed
know,
through. Okay.
Is it
yeah,
like
but
10% or 20%? I mean, I see a lot of them are like 20% off the top, maybe 30% off the top is what. Well, I mean, I got a friend of mine that says my goal is to get 200 properties under management at 30%, right? So his goal is to have not own the properties, but just have 200 properties that he has managed or on his website that he helps manage and helps whatever, and then he
right.
finds people to rent, and when they do, they stay, and he makes 30% off the top. So if you're paying $1,000 to the property owner, then he gets 300. So
Yeah.
it's a great model,
Yeah,
man. I thought, man, that's
the
great.
property managers are great. And then you can also have a co-host, and like Jay said, it would be like a similar model to that for the property manager, who would also be the co-host managing the messaging and all of the interactions and things like that. But the platform is really dynamic. I mean, you set your pricing list, so you could have like, this is my minimum amount, this is my maximum amount, and then it would smart price would go in between what the weekend rates and day rates are, in comparison to the listings that are in your immediate area, and then you can have your designated messages and everything. Anyway, I nerd out of all of that. I've
That's
taken
great.
all of my learnings and I've compiled them into a very clear document for success. So a
Wow.
little SOP document.
Awesome.
If you're interested,
Watch out. Here she
we
comes.
should connect afterwards.
Very
Here she
cool.
comes.
Okay.
Yeah.
Realestatemogul.com. Here we go. I
Hey,
love it.
How long
that
did
was
you
part
have
of
the
my
property?
buyout. That was part of my buyout is sold the property and then helped set up the ownership transfer. That is something to keep in mind.
Yeah.
If you do start an Airbnb business, if you cannot transfer ownership of the account. You have to, because it's tied to your social security number. So whoever's going to be the host needs to be the owner of that account, and you need to be okay with them owning that account. You can have co-hosts, but all of the reviews would be tied to your main account. So that's something that I learned. Because it was like, oh my gosh, how am I going to get all of these 40 bookings that are in the pipeline transferred over to this new owner? And how do I make that a smooth process? Was able to transfer about 85% of them. So their pipeline's looking strong for the next month. But yeah, it's definitely, I nerd out over that stuff. You can ask Jay. I brought it up so many times. But
I don't think you're charging enough money.
Excited for you.
You should have doubled the price and see what
awesome.
happens. If you're at 95%, if you're 95% full, double the price, see what happens, man. You never know. Okay, anyway.
I asked for more money. I had to settle for less, but that's how haggling goes. You set the bar high, and then you can go down.
Hey, let me ask you this, Tom. I mean, what did you like about King Operating? Let's get back to King Operating here. Let's. I mean, I want to know because there's a lot of people out there that think about oil and gas and think about what did you like about us. I mean, I know you've been an investor for number of years, and we appreciate you and everything that you do. What were you looking for, and is there anything in particular that you liked about us that said, okay, hey, I'm gonna try these guys out? Not only just one time, but you've invested several times, I think, right?
We've invested into Fund 2 and 3, so a couple different investments and multiple times within each of those funds. So maybe that's where the several comes into play for sure. Certainly like the space and did some research on oil and gas. And then I think the biggest thing with King is a massive trust factor with serious competence in this space and the transparency to the investors and the full alignment that I feel I have investing with King as a partner. So when I look at investment, a lot of times, some deals don't go well, but a lot of times it's not due to the structure of the deal, right, per se. It's usually maybe some incompetency in the management team, some other nuanced factor that came up that's not the structure of the deal itself.
Right.
And I think with King Operating, the trust factor for me is the first thing I look at when I want to invest with a company or a group of individuals, and how aligned are we with this investment? You guys are the operator, you're presenting the deal, and we're capital partners riding alongside. And I think you guys have been amazing and pretty much proven track record. What you said in the objectives. Sorry, my screen's bouncing here as I'm bouncing on my desk. The objectives are, what you've said and projected have really been coming to fruition. So it's proven. And it started out with a huge trust factor. Yeah. And that's a credit to you guys and your team.
You shifted to oil and gas. How did you find Jay and invest with him? And what made you shift into non-correlated assets like oil and gas and private credit and private equity and things like that?
Yeah. So oil and gas, that started from the deal itself and what the tax incentives were against W-2 income. So we were constantly looking at ways to offset my wife's income. The government, IRS loves us, right? We just don't have the ability. All my passive stuff stays in the passive lane, and all the W-2 stuff stays over here, and we're trying to offset that income. And oil and gas, outside of giving money to the federal government at the time, this is a few years ago, I don't even know the other options, if there are any anymore, of land lease kind of strategy, but you just gave the money to the government to get the tax, like a charitable contribution. And so this came along with an investment, and we saw this at one of your previous sponsors, I think, was promoting that, and I got on a webinar back in 22, I guess it was, and that's what started the process. And I started digging in, and then, of course, the rest is history. So that's where it started. Yeah.
Cool.
Hey, great. Well, we appreciate that. I mean, I'm doing my best. I've got a ton of experience, not only myself in structuring deals. I got some really smart finance guys and our operations guys just trying to, man, I mean, this let's don't make this harder than it is. Let's drill some good wells in some good areas and use that to generate income for investors, because hey, it is a great space. I mean, you get write-offs, you get monthly income. People have always said, hey, well, why don't we just send out revenue on a quarterly basis? I go, well, it's not the same. People like getting that monthly revenue check, so we have to just set it up to where all the income that comes in, this month, we got to pay the expenses, and then we just, but it's all just set up, and it has to be set up from it's hard to set that up because you have so many different things going on, and we'll make sure your checks are right. You'll make sure that all the expenses are for the wells that you're drilling, and we have 100 wells in Fund 2, a lot of different moving parts. So it's hard to, but anyway, it's just doing that. So we're going to get better at that. We're going to get better and better and better. So we look forward to that, but we're also not going to just put Fund 2 in the ditch or whatever. We'll continue to increase the value in Fund 2, and continue building that up. So we're really excited about, and we have a plan to do that.
So it sounds like. Oh, go ahead, Tom.
So I was just say one add-on piece to that. There's this was validated with my trust and alignment with King Operating. Was a gentleman who will remain nameless, a friend of mine who worked for Exxon at the time, met you down at, I think it's the NAPE conference in January down in Houston, whatever that is, and met Jay, talked to Jay, and absolutely loved the company and loved this business model and structure. So knew about Jay and stuff. So certainly valid. That's after all of my introduction and into the fund, but that was validated just this year with what he thought about Jay and the rest of the company. So I mean, that was awesome.
Oh, that's great.
Awesome
well, tell him I appreciate that. Is Mr. Nameless?
I will.
Tell Mr. Nameless that hey, we apprciate him, and a shout out to Mr.
Nameless.
Mr. Nameless. Absolutely. But yeah, that's great.
Yeah.
Well, I mean, it's because people know this that listen, but I take the oil and gas and use the multifamily model, and I think that's the biggest reason. Retail investors just don't do that. The retail person, the person like me that wants to write a check, I've got money in Fund 2 and Fund 3, and we're going to put more money in Fund 3. But the reason why we do that, and the reason why we've done that, is because we want the same thing. We want the income, and we want the tax benefits. But I also think about how do you structure it to where you can make a good return for clients, and that's what your buddy is talking about from Exxon, because he knows you can buy a stock, but a stock goes up or down, and you don't get any write-offs and no monthly income. You may get a quarterly dividend from some stocks, and that may go up and down. But with us, it's different. But I appreciate that. Jordan, what do you want to talk about?
Compare investing with this more passive opportunity with King Operating versus like managing your own real estate deals, because it sounds like with getting that check monthly from King Operating, it's just much different than managing your own deal. How do you compare the two?
So if we're looking at the other commercial real estate deals, including, hospitality, a couple hotels, some of the small pieces that we're into, those are all passive investments for us. The active management part I have is how are we balancing portfolio, and how am I shifting, getting out of a deal if we can or not, and if we have new capital, how's that going to get deployed, and how else is the portfolio being rebalanced, and how does that look? The real active part we have will be Belize right now. That's certain active business activity for us. The rest of these deals, Jordan, have all been really passive. We're capital partners in all of them. And I just manage how we go in and out of the deals and which deals we partake and how I research. That's about it. So I don't have a comparison of actively
totally
managing.
Fine. No.
We have other guys that are taking care of that. Yeah.
if you're looking at all of the investments that you have taken on and that you have in your portfolio right now, what's the one that you're like most excited about outside of Belize and building that project up? What's the one that you're like, this is really exciting, I'm so glad that I have this on my portfolio?
So not Belize. Okay, so that's a no. That's a given.
You can't say Belize. We know Belize is exciting. I can't wait to visit it when it's ready.
Okay. And I'm not saying this because I'm on your podcast. I'm really excited about King operating in this space. And it's
Mm.
because of a lot of, I mean, guys he's had on his podcast previously, probably last year by now, other research I've done, and where this sector sits in this time of the horizon of our global economics and where we're at with energy and all of that. I think sitting in oil and gas right now is really exciting. And I'm not just saying it because we're on the podcast. It really is.
Yeah.
And I think in certain private equity worlds, there's certain companies that we're investing in. I think they have a really good business strategy for how they're pursuing companies for private equity. And I guess also very exciting.
That's great. And I when I wrote the book and after I wrote the book, I've talked to a lot of people about this business and how we do this. And you know, the model and the way we do it is so different than other people, as I mentioned. But I look at it and I go, I mean, we got to dumb down some of the forecast because we don't want it to go too far up and go, oh my gosh, this is a 4-to-1, 5-to-1 if you sell at this price and all that. Which I mean, I don't even want to think about selling. Let's don't even think about selling. Let's just think about generating monthly income.
Right.
Sell down some because you don't want to have a lot of debt and things of that nature. But just to do it, and it's an incredible, you know, income stream for people. That's why I love it, man. I think it's great, and people love income, and that's how they retire. Like Tom, sitting out in Austin, going to blues festivals or going to all the different shows that down there, and
Right.
some of my favorite places. I'm trying to think of the place right now. But anyway, we won't go off on that. It's on 6th Street, the comedy place. That's one of my favorites. Oh my gosh, I went there
You think
one
it's
night.
still open? Because I know that
Oh,
Austin's like going through some major changes on 6th Street right
We
now.
are.
yeah.
You talking, is it Esther's Follies?
Esther's
That live
Follies.
act
That's it,
comedy?
man.
Yeah.
I went
Yeah.
there. I went there and I
Yeah,
went
they're pretty
back.
fun.
I mean, we were there for like 4 days, and I went there the first night, and I wasn't feeling good. I was kind of like busy and then all this stuff, and I got in there, and I could not help from laughing. I laughed so hard it was unbelievable. Well, it was so
Yeah,
funny.
it's pretty funny.
They were,
That's the
talking about the
best.
governor, but anyway, it's just you have to go, and it's if you ever go to
Yeah.
Austin, be sure and buy tickets early because it's sold out way in advance,
Uh-huh.
and it's an
I
incredible,
think so.
incredible show. That's great. That's great. What are some lessons you learned in real estate? What are some of those things that you go, oh man, I wish I'd have done that, or I wish I'd have known different. Let's give Jordan a couple of
Help me.
pointers here. Yeah. Let's a couple of pointers here. What is
Yeah.
it? Is there anything in particular that you wouldn't have done?
Yeah, great question. I think it's probably taken that first step sooner than when I did. And we always had our mind around, I'd read that Rich Dad book again. I don't know when it came out, but pretty close to when it did. So early 90s,
Yeah.
mid 90s. So don't quote me if I'm wrong, all the out there watching this, if everybody says he's so wrong on the book. But right about when it first came out, we never really did anything with it. We just were in our careers, doing our stuff, raising our family. And then eventually 15 years later came the investment piece. But we
Yeah.
always had our mind on it. And I'd
Yeah.
say we should have taken steps probably sooner.
Yeah.
Shoulda, woulda, coulda, but taking that first step and getting the confidence to keep driving, and then that just snowballs big time. And we've seen that, excuse me, later,
But
but we're much later down the
yeah, I
road.
mean, you have
doing
to
that.
you have to take out. You have to be an entrepreneur. I mean, you gotta eat, right? I mean, it's like you gotta eat, you
Yeah,
gotta
I mean,
invest,
gotta
and
go to
it's like,
soccer games. We
oh,
still
yeah.
gotta do all the stuff you're doing.
It's easy just to walk over and go,
give that up.
yeah. Well, I got $5 million. You don't just go to your bank account one day and you got $5 million to go invest in passive
Right.
income that you could just kind of,
Exactly right.
But I know
That's
it,
right.
it is tough, but that's why I think some people start selling real estate. They sell real estate, or they really get to know the markets and get to know what's going on, and then they jump out there and buy one property and then the second property, and then all of a sudden, they do very well. And but I know it's tough. It's tough to reach out there and learn the first thing. So
But since Jordan's already invested and already been down this path a bit, I don't know what else you're invested into, Jordan. I think it's, again, I think the biggest thing we've done is built a very trusted and aligned network of people that's brought deals to the table, allowed me to sit at different tables, different seats I wouldn't have had access to before. And I think
Yeah.
the network is huge, and you're probably already doing a lot. I mean, like you guys have a podcast show. You probably are major networkers, but I'd say that is key. Continue to
Jay
build
is the one. I mean, Jay is,
that.
never a bad thing to be the glue, I always say.
Yeah.
But
Okay.
and I would say Jay is that. But yes, no, his network is quite vast. And yeah, I've
Yeah.
met a few. TJ, I believe, was our TJ Rossi
Oh yeah, that's
last
right. That's right.
interview.
Yes, I
Yeah,
saw that. Yep, I did see
yeah,
that.
he's great. He's great.
Mhm.
Yeah, meeting you, that was great.
Yeah.
Yeah.
I'll
Oh,
gladly share after. Give me a call. Share the books I have that we were talking about earlier. Gladly share any information,
Tom, help
anytime.
me
Yeah.
out.
Yeah.
Hey, that book you had. Where's it at?
Yeah.
Well, go
No,
to lunch
seriously, that's
too.
stuff like that.
Yeah, go to lunch
Yeah.
with Jordan with Justin Donald. I mean, what a great guy that is, and
Yep.
he's all
I'd
about
love to.
lifestyle. He's all about, hey, as soon as you can, quit your job and just be passive and not passive. I mean, he's more about the active because to invest with him, you invest as a passive investor, but it's you can't do that unless you have a lot of money. So you got to figure out how do you
Gotta
make
make
money
money first.
enough to do
Right. Yeah. Right.
and
Gotta
But
make
I
money to
know.
make money.
So
Yeah,
there-
I know. It's a weird concept, but yeah.
And there are deals out there. We talked about it with Jordan too. It's like there's deals out there that you put together that you make a little bit of money up front, putting the deal together. You make money by raising the capital.
Right.
Then you also make money by managing. So there is ways, but it's really got to tie up a property long enough to go raise the money. So I know it's the cat and the mouse. If I had the money, then I wouldn't have to worry. But if I didn't have the money, then I don't have. So it's
Yeah,
like
right.
yeah. But
Yeah, it's there's a lot of sweat equity positions too in those deals where you're dealing
Yes,
from
the
equity
sweat
piece, right?
equity.
And you're gonna take it on the back end, but you're putting the time in now. So there's ways
Yeah.
to do it also doing that.
Absolutely.
I got a friend of mine too that really knocked it out of the park. Brian Kaminsky here in Dallas, and he put together a fund, and it's a fund that a lot of his high net worth friends got into, and what they did is he does everything from the money side. He does everything. It's like if you go find a house, Jordan. Let's say you find a house and let's say it's $200,000. May not be a house in Houston less than $200,000, but let's say you find one that's
I was
200,000
like,
bucks.
where are you looking? Let me
I know.
know.
Well, I'm not in your neighborhood. I'm not in your multi-billion-dollar neighborhood. But if you find a house, and it's a fixer-upper, you don't find a fixer-upper, right?
Mm-hmm.
So you want to say, hey, I want to find this house, and it's 200,000 bucks, and I'm going to put $50,000 into it, and it's going to be sold for $350, let's say, on the good side. Let's just say, I know that for me and what I'm looking at, I can put this house on the market. I can put $50,000 into it. Then I'm going to sell it for $350. I'll make $100,000. Well, he has a actual fund that will give you the money, and it's a really interesting concept. But he'll give you 100% of the money to buy the house and to fix it up, and to do everything possible. And as long as it's a 3-month or a 6-month turnaround, he has somebody go out and appraise it that knows the area, that says, oh yeah, well, this is a property, and if you pay $200 for it, you put $50,000 into it, it should be worth $350 all day long, right? So there are people that don't have any money at all, period, that say, oh, I'm never going to be able to do this,
Right.
but that's not right. I mean, there are people out there. Now, he takes a considerable amount. You don't make a ton of money on it because it's all his money, but he does share in the profits, and it's not a bad deal. I mean, Brian's a good
But
guy.
it's a start.
Yeah, exactly.
It's a start.
Do 3 to 4 of
Yeah.
those or whatever, and just get started, and then all of a sudden you get a couple behind you, and then and then you have investors that believe in you that'll give you 300,000, or be like Tom, give you unlimited amount of capital, and just say, hey, here it is, and got 3 friends, and it's like, here's
Right.
10 million.
Glad we met, Tom.
Yeah,
Yeah,
see?
indeed.
Only on the Jay Young Show.
I know,
Only
man.
on the Jay Young Show. But anyway, but that's how you do it. I mean, you got to start. And I think that's what Tom says is, it's like everything else. It's, I'll never forget when I started this company, in '95, and this guy was talking to me, and he goes, Jay, he said, this was in '94, and Christmas party in '94, and he said, Jay, he said, you take the risk. I've got the deals to sell you. and I got the deals to say. He said, all I need is the money. And I thought, man, I can raise some money from some investors. All I got to do is do the old, find big old stack of, leads and just go through them and hammer them, and get started. And that's what I did, and I started, in early 95. But it's taking that first chance. So I think that's a big thing. So.
Absolutely. Would you say, Tom, that that's the advice you would give to your 18-year-old self to start earlier?
Yeah, I mean, for sure. Like anything, start earlier. Just if you want to pursue it, get going. Don't find the reasons why you can't. Find the reasons why you can. And don't be apologetic about it. Just go after it and continually network. I do tell our kids, they're in their 20s now, but continually the network is the biggest thing. So try to continue to drive that the best you can. Surround yourself with good people. As Jay started out, the 5 people you surround yourself with is kind of how you're becoming and what you're turning into. So make it a good network.
Yeah. That's true. Very, very true. I love that, and I'm 100%. I'm 100% on that, without a doubt. No question. I tell my kids 100%. The same thing. Hey, so are you gonna do any investments this year? What asset classes look good this year? What's the big tariff? Trump, taxes, Teslas. All these T's going on around here.
Yeah.
What looks good this year? What do you
tell me?
Yeah.
Well, I go back to the 2 I said before. I think I'd like to increase our position at King, and a lot of my time and resources are going to Belize this year. I'll be down there about 50% of my time, so it's kind of all in at this stage. So Belize is exciting to me because that's the dream and that's where we're headed.
Oh, that's awesome.
I don't know how that looks as far as the investment world amongst other investments we have. I might have some blinders onto that, but I do track a lot of data, and I think the luxury vacation rental space down in Belize looks pretty good for now. Yeah. So, and
we're going to continue. I didn't pay you to say that online, did I? I didn't pay you to go. Yeah, I want to invest with King Operating and invest more. I didn't ask.
You did not, and I caveat that by saying I've done the podcast, but it has nothing to do with it. It looks like it, but it's not. I swear.
And those big. Is that big tunas down there in Belize when you scuba dive? Is that the big? I mean, they're huge, right? Bigger than anything that you've ever seen. The big tunas.
You can get into the tuna, but outside the reef, we're inside the reef when we're diving, or just on the outside. But I don't know if that's really what it's known for, is the big tuna. So you have to go out to get them, but you can.
Okay. Well, I mean, I've been there one time, and my wife and I, Amber Gasquet, when we first married, and 20 years ago.
Yeah, 20 years ago.
Man, it was awesome. What a beautiful place. Oh, my gosh. And we haven't been back.
So that's the island we're on, so that's good.
Yeah. I remember the big
I've never been. FOMO. It's happening.
We got to get you some passive income first. I mean, you got to make enough passive income.
Yeah.
I'm working on it.
Yeah. I know. We gotta get you a deal started.
I'll be able to keep up with the big leagues here soon, Jay. You taking me under your wing. I'm taking it seriously.
I'm only like 100 years older than you are, so I hope I've learned something. In this whole time frame. I tell you what, man. I tell you. Anyway, hey, we gotta wrap up. But I want to ask Tom, is there anything that you'd want to say to just? I mean, you can say great things about King if you want to, or no, I'm just kidding. You don't have to do that. But is there anything in particular you want to end up with the listeners?
I will say a good thing about King. I already have. I think it's been a great partnership, and I believe that because we've continued to invest and increased our investment dollars into King, and we'll continue to do so in 2025. And then I guess to leave, I said, honestly, we're just grateful that we've had some good people around us who've guided us on our journey. And again, this is just our personal journey of how we've put our investment portfolio together and how we think we've uncorrelated and diversified the best we can with getting decent returns. And without the network and without, we've had some divine intervention along the way, and I'm grateful for all that. So it's been a great journey. It's still getting better.
That's awesome. That is awesome. What advice would you give Jordan? Because you're here right now, and here's Jordan. And what advice? What advice would you give Jordan right now?
You seem like you've got everything under control, Jordan.
Wait a second. No.
I would say maybe ask Jay for money in an investment you're doing. Maybe
I
start
already did.
Oh, you did. Okay.
Yes, she sent me this text message. She sent me this text message
my
for
business
$100,000.
deal wasn't the best fleshed out business deal that it could have been. So I'm working on restructuring.
Sure.
I'll find a better thing.
right.
We'll continue forward. I'll get better, Jay. You just wait. I'm gonna say something, and you're gonna be like, "All right, there it is."
There we go. Hey, we'll find you some people.
Yeah.
Just find a good property, and let's that's great. That's great. Well, good deal. Well, Tom, it's been such a pleasure having you on the show today. We appreciate everything that you've done, and like I said, we did not pay you to be on the show and come up with those fabulous words, which we do appreciate. But also, best of luck on your place in Belize. Sounds like a wonderful place. You know, be sure and work out while you're down there in Belize. 'Cause I know you can just sit around, and man, that'll be a great place to lounge and get in a hammock. I'm sure they got plenty of hammocks there, and just
not doing a lot of that down there.
yeah, just enjoy.
But soon we will.
Yeah, there you go.
I appreciate you guys. Thank you very much for having me. This was great.
Absolutely.
Really great opportunity.
Thank you very much. Appreciate you being on.
Thanks for having us alongside you guys. Really appreciate it.
We appreciate your investment in King and your confidence, and
Yeah.
hey, you got the guy right here that's going to make that deal happen. And I do not give up on anything. Period. End of story. So we're gonna keep it up. I put my own money where my mouth is too. So that's another good thing. So there you go. All right. Well, thanks a lot.
Awesome.
Appreciate it.
That was good, you guys.
Jordan,
Great
thank
to meet
you.
Jordan.
Thanks, everybody.
Okay, good to see you again, Jay. You guys take care. Thanks again. Appreciate
Thanks,
it.
Tom. Give Justin a call. Justin Donald. Give him a call.
Send me the link. I'll find him.
Okay.
That sounds good.
We're connected on LinkedIn. It's happening.
There you go. That's the first place I'll look. Thank you, guys.
Thank you for joining us today on The Jay Young Show.